Hi, thanks for watching. In this video segment, we're going to cover the 8 stages for selling a business. And these are the stages that if you're a business owner, you really need to understand to properly sell your business. But this is also helpful to any investment banker, or business broker, or attorney or accountant who wants to understand the process in general at a high level. In other classes, we're going to cover in more detail the specifics, but here we're going to show you an overview of what you need to know to sell a business. So to start off, the first stage is really understanding the terrain. And what we mean by that is really understanding who the key players are out there that are interested in buying your business, what it is that you're going to sell, and setting up your deal team to effectively do it, and also making any changes you might need to make in the business prior to undergoing the rest of the process. So in understanding who you're going to sell it to, there are a couple of different types of buyers that you can potentially engage in selling your business. There are high net worth individuals, there are private equity groups, and strategic buyers. High net worth individuals generally buy businesses that are very small, but also go up to a couple $1,000,000, and generally buy profitable businesses. These buyers generally are individuals who maybe have worked in corporate America for a couple years and decided that they no longer want to do that. They've saved some money and have always dreamt of being an entrepreneur and want to go ahead and buy a business. And what they're looking for really is to buy either a lifestyle business or buy a business that generates the cash flow that they need to live. And so they're generally going to buy a smaller business, but you're going to see those businesses mostly selling to those individuals if you have a business that's with limited profit or is making maybe up to $300,000 in free and clear cash flow. Private equity groups are groups of investors that pool capital from limited partners, and their profession is to go out there and buy, build, and sell businesses. They're generally looking for businesses that are generating about $1 million in EBITDA in cash flow. Actually, there's a difference between EBITDA and free cash flow, which we cover in a separate class. But for our purposes now, private equity groups are generally looking for a business that's generating EBITDA greater than $1 million. So if you're not really selling, if you don't have a business that's generating that kind of cash flow, I think it's approaching private equity groups may have some limited success. But the last category is strategic buyers. Now those buyers are companies, those are the ones that you read about. They could be privately held companies or they could be large publicly held companies. Now they will buy businesses at any size. I've worked on many transactions and worked on advising small business owners who've sold their business to large strategics. But in particular, to sell it to a large strategic, they're looking for something very specific that's going to meet some strategic need. Now, it could be that you have a special team or a unique set of assets, or you have a dominant place in the marketplace, and that's what they would generally be looking for. But in this first phase, you really need to understand which of those 3 likely buyers are going to buy your business. Next, you need to have a discussion with your investment banker or business broker about what your likely options are in selling to them. So are you going to do a leverage buyout where you're going to sell to one of the 3 buyers and they're going to put in some equity and they're going to finance the rest with debt? You need to understand what the tax implications are of different deal structures. So let's say they're going to do what's called a recapitalization, or they're going to provide, let's say you're going to stay in the business and they're actually going to provide equity and you're not leaving but you're selling part of it. All of these different options have different implications for you as a business seller as to your future with the business, your tax implications, and implications for your team. So these are very important discussions to have with your broker or investment banker to get those out front. Now the last category that you need to really think about for this phase is, actually there's two categories, but one of them is the team that you need to build, because these conversations that you're having need to be done in context of a team. Now your M&A team or your deal team really is comprised of internal people who know that you're actually going to sell the business, but also your accountant and your attorney or other advisors. Now it's important to bring those advisors in this stage and have those discussions with them, because they're going to influence a lot of the process down the road. And if you haven't had the discussion with your accountant about tax implications of different deal structures, or with your attorney, you may find yourself having invested a tremendous amount of time and money in selling your business, and not be successful in selling it because you haven't had these discussions up front. So it's important for you to have these discussions with your investment banker and business broker, and also with your team in place. But the last piece is also thinking about what pre-market enhancements you're going to make in selling your business. So you have to think about that your time frame. So if you're going to sell your business, and generally you want to start this process a year ahead of time before you actually go to market. So it gives you enough time to prepare all the materials that you need to prepare, but also to make any enhancements to your business. So if it's a small business, you may want to make it just look better, so business buyers will be more interested in it. And if it's a larger business, you may want to go ahead and prepare or just fix things that you haven't fixed. That's going to make it easier for a business buyer to digest, because the more risk that a business buyer sees in your business, the more they're going to price that in. And that means, just translating what that means to you, it means you're just going to get less money. So the more enhancements you can make that really can help you, the better your ultimate return will be. Now, your business broker and investment banker can be great guides in this, because they can tell you whether or not a specific enhancement is going to make any difference at all. But this is a very important phase. This is one of the most important phases, because if you start off well, then you're highly likely to have a good transaction. But if you don't have these open discussions with your team and your investment banker, you're going to definitely find some problems down the road. And I hope that you watch the rest of these classes and get some tips and insights that'll save you a lot of time and tremendous amount of headache. Because I've been down this road many times with advising business owners, and I can tell you that if you understand the process and work the process, you will save yourself a lot of time and money. Thanks.